Hello, this is Pat Walker at MissionWinners.com. I'm making a video here for Chris. Chris, you got a great question pointing out, crashes. Crashes. What about crashes? We had one in 2008. Yes, I will tell you there. Just to let you know, I was there for 1987 also. And I'm thankful because of Martin Zweig. I missed it completely. My managed accounts were completely out, and it's not because I'm so smart. It's because I followed somebody who was smart. And we got stopped out of basically all of our stocks about 2 weeks before the crash and just stayed out. So that was great. That was great. The moral of the story was this: watching, not forecasting, but watching the market action every day. How do you detect the crashes happening? I can't detect a crash. That is impossible. I can easily detect crashes. Yet, I won't say easily. First off, I won't say crash. Detect the potential for a decline? Oh yeah. In fact, I'm going to show you. This video will really help you. Then you ask a couple questions. How do I trade in a big decline? I don't. Maybe I'll do an inverse ETF, but do I short much? No, not much. I'll just sit in cash and wait. And here's why. I don't want to get chewed up because it screws up my head, and then when things do get better, I miss it because, oh gosh, this might not be it, this might not be it. No, I don't have any emotional baggage. One of the degrees I have is in psychology, so I'm really big in trying to understand what's going on inside my head. So I try to just get in line with what is and let it work. Will I do the inverse ETFs? Yes. I love those. The triple ETFs kind of scare me. I got to tell you. And I'll just share this with you. They can move so quick because it's a triple. Man, it can just rip you up. I love the doubles. I love QLD and SSO. I love them. But man, I start getting into triples. Woo, the stress gets higher. And then when the emotions and stress get higher, the thinking gets cloudy. And I don't want to do that. So let's go through this and tear this apart, okay? By the way, I want to share this with you, Chris. Thank you for the great words and comments at the end of your email here, sir. It touches my heart. I appreciate it. I work really, really hard. Like I said, I've been doing this a long time. And man, I floundered. There was nobody out there. And thank God for Martin Zweig and then Bill O'Neill. Those men changed my life. That's why I had to make it a point to meet those guys. I was like, thank you. So anyway, let's get down to it. Probably talked too much there, and I'm sorry, but it's relevant. And again, I thank you for the kind words. We're looking at spiders, and we're back to last year. All right? Look at this. We're going back to 920. And this is something I do in the videos every day. And I stress, if you start doing this, you will start connecting the dots. Knowledge is power, and this will give you that power. Here you go. The spiders closed up in September. Look at this, hitting highs. Everything's great. Hitting highs on good volume. Everything's wonderful. See that? Now, I want to show you something. This is very important. That's the open. That's the high. This is the low. And over here is the close, that little hash mark. Open, high, low, close. It's crucial and volume. Charts talk. We just have to listen with an open mind. Looks great. Hitting highs on the move. Advance it one day. Oh. It gaps down and closes near its lows on a big pickup in volume, even heavier volume than the day before. Is that the day to sell? No, it's still above the moving averages, but it's a red flag saying, that's interesting that we went up on good volume and we fell on even heavier volume and we closed near the lows. But advance it a day and see what happens. Oh, look at this. It gaps down, it falls, and it closes in the top half of its range. It bounced off the 20-day, the rising 20-day. Volume was low. So would you be getting lighter here? You'd definitely be getting lighter on this day, okay? That's serious. This day you just sit tight and wait. See what happens. The trend is still up, right? Moving averages are still going up. Advance it a day. Now look at this. It gaps up. See the open? Runs up, and then reverses and closes in the bottom half of its range. But do we panic on this day? No. Why? It's above the moving averages and volume was low. So we sit, see what happens, okay? Advance it one day. Oh, look at this now. It gaps up. You see the open right there? It's hidden a little bit by the yellow bar. It gaps up, it runs up, and then drops and closes near the lows of the day, below the 20-day. But what's the big deal here, brother? Look at the volume pickup. Now, is that the day? So, geez, I got to sell everything? No, gosh, no. But it's another warning sign saying, better watch this. We got a couple of distribution days in here that ain't so good. I've sold some into strength. We don't know the future. You just live in the now. By the way, I will tell you this. You can't catch me in a lie. Go back in the library and watch the keyless videos from this period in time because I was talking about it. It'd be a pain to find it because it's way back there, but it's in there, let me tell you. It's in the library. So this is what you're looking at. Are you getting lighter here on this day with your stocks? Well, yeah. Why? You gapped up, you ran up, you closed in the bottom fourth of its range on the daily bar, and you did it on a pickup in volume, and you lost the 20-day. You get a little lighter. Advance it a day. Okay, look at this. It gaps up, it runs up, and then fades and closes in the bottom half of its range on less volume. Is there a lot of power in this bar versus this bar? Everything's relative to previous bars. A lot of power in this bar versus this bar? No. It gapped up, you go, whoa, that's great. It ran up, whoa, that's great. Closed in the bottom half of its range, maybe the bottom third of its range. What's the one saving grace? It's above the moving average, but volume is low. So is there a lot of power in that bar? No. Is that a reason to sell everything? No. But you did sell some up in here, right? So let's advance it a day. Okay. It gaps down, runs up, closes in the bottom half of its range on a slight pick in volume. That's a constructive day. But everything is relative. The volume's decent. But is it less than this down day? Yeah. Is it less than this down day? Yes. Do we panic and sell? No, we haven't had a trigger yet. We've sold some, as I stated, but watch it and see what happens. Advance it a day. Look at this. It gaps up, it runs up, closes just almost at its midpoint of the day on a little bit less volume than the day before. It's a constructive day, but volume really wasn't that heavy. This up day, and by the way, it closed below where it opened. What does that tell you? It was met with some selling. You combine this with this bar and its volume and this bar and its volume, this is not that powerful of a day. Just advance it one day. By the way, if you notice, we ain't looking at any hourly charts or 30. We're just looking at the daily chart. Advance it a day. Okay. It drops down, runs up, falls down, closes about where it opens on low volume. This is just a note. This is a nothing day. It's above the 8-day moving average. There's nothing here. All right. We've had a couple of problem days. This is just a non-day. Nothing. Do we freak out? Why? Everything's fine. Advance it a day. Now look at this. This is where it gets great. It gaps up. You see the open? It runs up. And then it drops and closes in the bottom half of its range, bottom third of its range, on a pickup in volume. This bar is met with sellers. It's a green bar, but look, there's the open, there's the close, gaps up, runs up, drops on a pickup in volume. They sold into that bar. Now is that the day to sell everything? No, but it's just another red flag saying, oh, I don't know about this, so advance it a day. Gaps down and drops down to the 50-day on frickin' heavy volume. There's a day to sell more. Now, it's still above the 50-day. You could sell it all, but you're still above the 50-day. But are you going to sell more on that bar? Look at the volume on that bar versus these bars. Do this, Chris. Advance it one day. It drops down, it gaps up, runs up, closes right at the 50-day, but it lost the 50-day for a while. And look at the dang volume. They're selling here. Could you sell more on this day? Yeah, you lost the 50-day for a while. Advance it a day. Oh, look at this day. It gaps down, it drops, and closes basically almost unchanged. It is unchanged versus the previous day. What's good about this bar? It found support at the 50-day. What's bad about this bar? Just a neutral day. It's not a green bar and it's not a red bar. So there isn't, and volume was okay, but it wasn't as heavy as these down bars. So we watch. Advance it a day. Now look at this. It gaps down, it runs up, falls, closes down on the day versus the close, but low volume. Is that a freak out day? No. But again, another day where it closes in the bottom half of its range, and it's a day, check this out, buddy. Did it close below the 50-day on this bar? No. Did it close below the 50-day on this bar? No. Did it close below the 50-day on this bar? Yes. But the volume was less. There's the saving grace. We've had some warning bars. Advance it a day. Buddy, look. Gaps down, drops like a frickin' rock on volume. When it starts gapping down, and then definitely when it loses this bar, man, you're out. You're out. And you miss all this crap. And we did. Anyway, I'm sorry, Chris, this went this long, but I just wanted, it's a great question, and I wanted to be very thorough and slow in the analysis. And I hope that helps you, sir, and I hope you have a great, safe weekend.